Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online, and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, we're going to be following up on August production results from Bit Digital and Hut 8, along with a correction from Hive. We've got a lot to go through in today's presentation. Before we do though, please take a second, smash the like button guys, big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comments section below if you're holding any of these 3 companies, your outlook on the Bitcoin mining space itself, and your price target for Bitcoin for the end of 2024. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got more production results from the month of August. Anthony, we've also brought along some macro tables and charts. It's been a couple of days since we updated on the price of Bitcoin, the difficulty, and some of the bigger, I guess, headwinds stressing this industry. So we've talked about it in relation to the August production results. Obviously, difficulty up, Bitcoin price down, causing some stress for these miners. So why don't we kick off with difficulty, then we can talk about hash price before we get into Bit Digital and Hut 8 today.
Yeah, so mining difficulty has been a real issue all the way through 2024. We've seen the Bitcoin price start at 42,000, reach 73,000 back in March. It's round about the 56,000 today, but the difficulty has pretty much gone in one direction since the start of the year, and it's reached all-time highs literally every 2 weeks. So every 2 weeks, the difficulty is adjusted, and that's based on how much hash rate's on the global network. And if there's a lot of hash rate in the global network, it means that the blocks, the number to allocate or to find in that 10 minutes, if there's more hash rate in the network, it gets found a little bit quicker. So every 2 weeks, they have an adjustment to make sure we can bring that time back towards 10 minutes, which is the time it should take to mine a block, and that's how it's calculated. Now, if you look at,
just to interrupt there, I remember us talking going into the halving about 20-30% of global hash rate coming off. We talked to a few CEOs about this as well. With the mining economics how they are now, the Bitcoin price, there's got to be a lot. You talk about fleet efficiency, right? Some up in the 30s, 35s. There's got to be a lot of these miners that just aren't profitable at these levels. Are they mining at a loss in hopes of future rewards? Are they getting free power? Why are we not seeing the global hash rate fall off as anticipated?
So there's a couple of reasons. Actually, just to reiterate what you said there, back in January, I think it was JP Morgan announced they expected about 25-30% to come off the global hash rate post the halving, just on the mere fact it wouldn't be profitable for a lot of mining machines on the network to actually get a margin from literally mining. Now what we've seen in the sort of like North America is these big public mining companies have been going out and buying more efficient machines. We've seen, take IREN, for instance, they're at 5.8 exahash in December last year. They're at 16 exahash today. So one company alone has added 10 exahash of more efficient machines to the network. That means they've got their costs down really low now. And as is shown on their update yesterday, mining Bitcoin with an energy cost of less than 30,000. That's the cheapest we've seen this month. And then you've also got the likes of CleanSpark, who've been adding, S21 miners. Riot have been adding the micro BT latest and most efficient miners to their rigs there. So all these big miners who've been growing massive amounts of hash rate this year, that will be adding to the global network. So, it's not a case of nothing's come off the network. We've seen a lot of miners buy more efficient machines. So you're actually then able to, mine Bitcoin, even at these levels, and create a little bit of margin. And even we've seen some of the smaller miners as well. The likes of DMG have just gone out there and recently purchased 4,550 T21s, which they're expected to announce the installation in these next few weeks and get their hash rate up to 1.7 exahash. Those T21s are operating massively more efficient than S19s. And we were talking about, S17s, S9s coming off the market, like 6 to 8 months ago. S19s with an efficiency of around about 30 joules a terahash. They'll have to start coming off the network, shortly, because it's just not going to be profitable unless you're operating at really, really cheap energy prices. And we've not seen, many of the miners, get, near a free energy. We've seen a few instances. So we've seen the likes of Soluna. They can attract about 3 cents. Cypher just under 3 cents. TeraWulf this month announced their average cost per kilowatt hour was about 4.4, so that's creeping up. And bear in mind, they've got a 2 cents deal at the Nautilus site, so you can see the market price for the rest of their hash rate is actually slightly higher than 4.4. That's the market rate there. Riot have been able to navigate this quite well. They've been using some of the market rate in Texas at the Corsicana site, but they've got a PPA agreement, which is really cheap. Because it was taken out, many years ago when energy prices were what they are today. So, we've seen that increase in global hash rate in the public miners. And what we might see is there might be some mining companies out there that are just holding on, waiting for Bitcoin price to rally and effectively sort of building up, small losses each month on the hope that we see a Bitcoin rally, as we have done in every other cycle.
Gotcha. Yeah, that makes sense. Thanks for the clarification there, Anthony. And it's really astonishing to see the efficiency of some of these machines, effectively removing the impact of the halving if you're able to purchase those next generation miners. And I know you were sending me some images last night, Anthony. It seems all of these manufacturers are pushing towards that coveted 10 joules per terahash, which I'll expect us to see next year. Now, in terms of hash price, this has been another agonizing story, I guess, for the miners. You mentioned on your spaces with Amanda Fabiano, if you guys haven't listened to that, definitely check that one out. I think you mentioned, Anthony, we were averaging about 110 prior to halving dollars. We've now dropped into the 40s, so we are well below half or 50% in terms of the reward that in revenue that these miners are seeing. Is this sustainable? Do you think the bottom's in here, Anthony? I feel like I keep asking you the same questions and we just keep going lower.
I don't know. I listened to the technical guys. I thought we'd reached the bottom and we're on our way up, but it looks like it's been going down and down. I mean, it's at around about the $40 per petahash per day at the moment. That's a significant drop from where we were post the halving, when we were up probably about closer to 60. So again, it's another chunk of potential revenues, moving away from mining companies. And I articulated this in a recent article for Compass Mining, in the fact that how difficulty and hash price affects mining companies. It's not just a case of just operating your same hash rate day after day after day and you'll get the same production. No, you won't. I mean, the production that mining companies were getting in January compared to what they are today with the same hash rate is drastically different. And yes, we've been through a halving, but even fractionally, that the impact of difficulty is probably given another 30, 40, 50% reduction in production since January. So we've always been clear on podcasts is that these mining companies, as well as getting the most efficient machines, and you've got to maintain your hash rate along with the global hash rate to stay in that position there. Otherwise, you just start falling behind.
Yeah, that's certainly true. If you're not growing, you're shrinking. I remember you saying that to me in one of our very first meetings, Anthony. Hey, and just a quick note as well, you guys, we've been talking about Amsterdam upcoming next month in October. Ticket prices are increasing. We saw this with Nashville as well, you guys. So if you are going to be in the area, you want to stop by, we're going to be doing a subscriber, a fan meetup there, 10% off if you use the code Power Mining, but make sure you get those tickets before the price increase. So I want to transition now into some of the miner-specific metrics from August. I was thinking maybe Bit Digital was where we could start, Anthony. Obviously, a lot going on here. We've had Sam on the program. I saw their HPC revenue for the month came in solid again. I think 4.3 million. So a great endeavor down that trail for Bit Digital and the team. Another noticeable increase on the month over month was the Ethereum staking rewards. So that was up nicely, I think 19% according to your table, Anthony. So let's get into Bit Digital next up.
Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today.
Yeah, so Bit Digital mined, 53.4 during the month. And this actually just articulates, the challenges miners have got. So in July, they mined 60.5 with effectively, not much different, 1% less hash rate. They've lost effectively, seven Bitcoin during the month of August than they did in July. So the impact of difficulty is not to be underestimated. Fleet efficiency is 28.3. Now, Bit Digital announced recently, we had Sam on the podcast, and they did have an original target to reach 6 exahash by the end of the year, but it looks like Bit Digital are now focusing, more so on using their capital to grow their HPC AI business. And as you rightly said there, they got 4.3 million of revenues during the month, and that was the same as what they got in July. Now, there was an expectation that we would have seen an increase in their revenues because the contract was due to increase to 92 million annualized revenue, but the company or the client has said that they want to consider increasing the contract, but using these more efficient or the next model in terms of HPC. So they're looking for Bit Digital to acquire the latest machines in, and then that contract will resume once there is. And I think that's towards the end of 2024. But 4.3 million, that's the 50 million annualized revenue that we expected. Now, in the first quarter, Bit Digital highlighted that they had to return, I think it was about $1 million, just over $1 million in terms of performance with the contracts, and it was just sort of sorting out a few teething issues in the first few weeks. In this update for August, they've announced that they've issued a credit relating to the downtime experience for the period February through to June. So over that period there, that's $579,000. So, as with any big contracts, you will be required to, you'll have performance clauses in those contracts. And there'll be a performance mechanism or a payment mechanism that determines any reductions in the monthly price, which is agreed before the contract's taken out. So this was not come a shock to Bit Digital or to the clients. It's all agreed in principle before there, and there'll be a mechanism that calculates exactly if there's any reductions to the monthly income. So in that period, Bit Digital received close to $12.5 million in revenues for their HPC, and they've had to repay 579,000 of that back to the client. Now, with regards to the Bitcoin holdings, they've now got 682 Bitcoin and 27,331 Ethereum, and both of those amounts have increased since the previous period. So Bitcoin hodl's gone up by 6%, and Ethereum was actually increased by the actual production of the rewards they received, the 56.6 rewards they received in the month there. If you look at those two coins in their treasury and look at the value of those coins for August compared to July, The value in August, bear in mind you've increased both of them significantly, is actually $1 million less than it was in July. And again, this is down to the fact that the Bitcoin and Ethereum price dropped sharply from the end of July through to the end of August. So again, we've talked about, companies hodling, and, you're going to have some times when the Bitcoin price drops and then your value of your hodl reduces as well. So it's not always going to be uptime. We've had many months this year where it's been green month after month, but we're seeing now the last few months now where we're seeing the Bitcoin price pulling back a little bit. And we'll need to get one of our technical analysis guys on the podcast soon to give us some updates as to where they see the Bitcoin price and Ethereum price moving, and some of these mining stock prices as well over the next 5 or 6 months.
Freedom by 40, where are you, buddy? We need your help. Anthony,
help.
Two things on the HPC front that I don't want to say concerning, but starting to get the gears in my head going. Number one, we already have a client pausing the contract to upgrade the equipment. At least that's what Sam stated. So one concern for me is the equipment upgrade cycles. These H100s are super expensive. They're really the workhorse of the industry right now, but I can't imagine it'll be long. I just saw Elon Musk say for Tesla and his data centers, they're going to upgrade to the H200s. Obviously, Blackwell's coming down the pipe. So that's one concern for me, Anthony. It's such a new industry, such new technology, such a big learning curve in terms of the production of these chips. The other thing is these credits for performance. So we've talked about the different levels of data centers. You've said the 5 nines comment multiple times, Anthony. What we have is we have a lot of these companies that are kind of retrofitting or trying to, I don't want to say a square peg in a round hole, but they're trying to retrofit their data centers to fit these HPC needs, which obviously have a very different setup and architecture. Do you think we may start to see more of these performance-based credits as these facilities just perhaps up to that tier 4 standard?
Yeah, in terms of Bit Digital, this isn't a conversion of a HPC facility. They've got a tier 3 HPC facility that they're leasing in Iceland, so totally different facility already. So it's not because of that there. There will be some teething issues. And for these type of, for the HPC, because you're working with a client, bear in mind, when you're Bitcoin mining, you're not working with a client, you're doing everything yourselves. You don't have to hire sales teams and admin teams to deal with clients and on the day-to-day performance. It's just you against Bitcoin and that's it. But now that some of these mining companies are going into that, there will be other things they've got to maintain. You've got to maintain standards because that'll be in the contract. Like anything, if you're required to produce or have so much uptime with regards to your HPC, then that'll be contracted. There will be some sort of levels that to meet, and there'll be zones there that that they have to achieve. And it might not be 5 nines in Iceland. It might not be 5 nines. It certainly won't be 5 nines for that contract in Texas because the power gets turned off with regularity. But you know what? On that particular contract, Core Scientific haven't got any risk because the risk is with CoreWeave and the energy provider. They've actually pulled themselves out of that risk. That's great to them. But for Bit Digital, they will have some sort of potential risk. And they've been, to be honest with you, they've mentioned it in the monthly update. That's been totally transparent to everybody. There's no requirement for them to mention that in the update. That would have come through in the accounts and they could have put it in the accounts. Yes, they would have mentioned it in the accounts because, companies are required to update on every cost that they incur. And that will be a cost. That'll be a penalty cost for not achieving the service. But they've put it in the update. So like IREN did, last month with their energy hedge, they were transparent about that. And we saw Dan come on the podcast and give us a real good update as to what they've done and look at the change around in in August compared to July. We're also seeing Sam, who's been totally transparent with everything that Bit Digital have done. And, that's why the popularity around this company is growing because they do deliver. Now their HPC revenues are outperforming their Bitcoin mining revenues. So in terms of Bitcoin mining, 3.1 million, in terms of HPC, 4.3. So this is a change. And we know that they've got great margins on the HPC. And with every miner at the moment, the challenge is actually making margins once you've paid all your costs. It is really, a challenge. These miners, because they've got reasonably good efficiency, they can stay online. But it's if that price drops further, it's going to be challenging for some of the miners, sure.
Yeah, it certainly will. We also heard Sam Tabar talk about potentially owning the data center for the HPC side of things and the vertical integration strategy. So that'll be an interesting narrative to follow as well. We also have Marathon now hiring some staff to gear up for HPC. So never a dull moment, Anthony. Next up in today's video, though, I wanted to talk about Hut 8. So in my mind, Anthony, there's a couple of these miners now, Bit Digital being one of them, Hut 8 being another one of them, that have really, I guess, veered from the pure play mining route. They've started to explore other opportunities. And for these companies, when you look at the amount of Bitcoin, for example, 87 Bitcoin mined by Hut in the month, compared to their total megawatts under management in their pipeline, it's really a small percentage now, or small fraction, Anthony. So another company that we started covering as a pure play Bitcoin miner years ago and really branching out into new opportunities now.
Yeah, Hut was in my first tables, alongside 5 or 6 other miners with the likes of Hive Digital, Marathon, Riot, Argo Blockchain, in the Hive Digital. There was and Bitfarms, probably about 6 or 7 in the early start when I started doing this. Using Twitter to highlight the analysis on a monthly basis. So they've been around, and they're one of the 3 oldest public miners in North America. So
those
they've
are
been
back
around
in your teenage years, weren't they, Anthony?
Back in my teenage years, yeah. Swing that lantern,
so, there you go.
But yeah, what we've seen is a different direction. Now that they're maintaining their sort of like their self-mining that Hut 8 brought to the table as part of that merger of equals with USBTC. But what USBTC had, they had sites with power, and they were providing hosting services and management services. So just to clarify the difference between hosting and management, hosting services, you'll have the site, you own the site, and you'll have customers who want to put their machines in the site, and you'll get basically an agreement or a payment for hosting them, and you'll charge that payment plus the energy cost to the client each month for them to host their machines there. Management services, you don't own the site. You're literally going in there and managing the actual infrastructure on behalf of a client. And therefore, you just get paid a service for managing it. So, I suppose in the current time frame, that both of those services are actually quite good, because effectively what you're going to be earning. The smaller part of their business really is the self-mining business, and that's the thing that's not as predictable, because that relies on the Bitcoin price, and you can see that they've not effectively been growing their hash rate at the moment. Although with their new site, they're looking to the new 205 megawatt site. They're looking to either allocate that power to HPC, or to grow 16 exahash of mining on that site there. So they have 2 options, which they announced in their quarterly earnings update that they had in place for that. So hopefully Ash will come on and give us more of an update in the near future as to what they decided on that. We've asked the question many times about upgrading a fleet, because their fleet at the moment is 31.7. So it's sort of like in the lower quartile of the companies that I currently analyze. And they've been open and transparent about that. They said they're looking for the right deals, and they believe that the right deals will come along. There'll be machines there to buy. So they're playing a bit more of a longer game than some of the other miners. But let's give Asher and the team at Hut a chance to deliver on that. Basically, he did say, come and judge me on Q3. Well, we're in Q3 now. We've got about 4 weeks to go of Q3. So be interesting to see, how they're next earnings updates looks like when it comes out, during August, to see how that performance is. And we'll get Asher back on the podcast and ask him some of those questions.
Sure.
In terms of like Bitcoin mined, yes, 87 in the month of August, 105 in July. So that's a drop of 17%. So obviously we've talked about difficulty. We've talked about, how that impacts the mining companies. But that suggests to me that maybe there was a lot more curtailment in August. 17% is a lot bigger than some of the other miners were actually highlighting from theirs. So we looked at the difficulty. It's probably in the low single-digit numbers, maybe as high as 5 or 6%, but nowhere near 17%. So that is a bit of a drop for them. In terms of the HODL, though, the HODL seems to, at least it's maintaining its level. It's added 3 to the HODL from July, so that's now at 9,105. And in terms of the value of that HODL, as at the end of August, that's nearly $537 million. Now it was $588 million at the end of July, and that's really because the Bitcoin price dropped from effectively 64,000 down to 59,000. So that's 5,000 per Bitcoin. So if you do the math in your head there and multiply that 5,000 by the 9,100 coins there, that gives you probably close to the difference between those two numbers there. So that's the impact from a miner with a really large HODL. We don't see that level of impact with Digital's HODL. But then Digital have got 642 Bitcoin, Hut 8 have got 9,000 plus Bitcoin. So, great when the Bitcoin price rallies, but when it's coming down, that number changes, in a bigger as well. So we'll have to keep an eye on that there. But we'll just have to wait for more updates from Hut. As I say, people are wanting to see when they're going to improve their fleet efficiency, need to get well under 31 now. Some of the miners, now we've got IREN at 18 joules a terahash. We've got CleanSpark just over 22. We've got a host of miners around the 24 and a half level. So there's only a couple of miners now, I think, with efficiency greater than 30. So a lot of the miners have been doing, and what we said, 6-7 months ago, pre the HODL, what were they doing to prepare? Getting more efficient fleets, getting cheaper energy, and getting a cash runway. Now, Hut have got 2 of those, because what Hut have done, yes, their efficiency is 31.7, but Hut now fall into that bracket as one of the miners with the cheapest energy. So they put out an update recently that they were achieving just over 3, I think it was 3 or 3.1 cents a kilowatt hour. So that puts them in that sort of SATO, Wolf, Riot, Soluna bracket. Those 5 miners have probably got the cheapest energy of all the miners. So Hut are in that place there. Yes, they'd probably like better, more efficient machines, so to keep the cost of mining a Bitcoin lower. But that's a really good price, and that price is probably offsetting some of that fleet efficiency. And what they might be doing, if you think about it, with the 87. They might be doing exactly what a number of other miners have been doing in the month of August, is actually underclocking their machines to achieve a better efficiency level and a better return. So not overclocking the machine, but actually underclocking some of these mining machines and getting a more premium return from them. So maybe not as much Bitcoin, but you're not using as much energy to mine that Bitcoin. So we'll see when the numbers come out, because that needs to obviously stack up. That's me making an assumption as to why it's so much lower. But we have seen that with a couple of other miners in terms of where they've articulated, and Hive Digital actually said they were able to get their mining fleet efficiency down from 24.5 to 23 on the grounds of how they underclock their mining machine. So maybe Hut have done something similar with theirs. We'll get Asher or Sue to try and give us an update on that in the next few weeks, see if they can come back with a response to that. But that's probably them. Yeah.
The power price was a pleasant surprise to me, Anthony. I had no idea that they were in that type of echelon. And we've talked a few times about the different quartiles of efficiency in terms of fleet. So in my head, Anthony, and correct me if I'm wrong, I'm basically thinking there's sub 20, there's 20 to 25, 25 to 30, and then 30 plus are kind of the four buckets that I think about, hey?
Yeah, probably. And only IREN are in that first bucket now at the moment on their own because you know they've grown hash rate in terms of percentage growth probably more than every other miner this year. I mean, you go from 5.8 to 16, and bear in mind that's going to be 20 in less than 4 weeks' time. So they will have grown hash rate like potentially, you know, well over 300% just in the first 9 months of the year. And guess what? They've got another 10 exahash to get in the last 3 months of the year. So
and bringing the
you know,
efficiency down.
and it's all with efficient mining machines. It's not with just any mining machine. They've gone out and got the best ones to do the job. So you know, S21, T21 miners, the really efficient miners there. And so that, you know, in terms of fleet efficiency, it's going to be hard for anyone to catch them, certainly this year. Maybe next year, you might see some of the other miners when they've expanded their fleet and replaced machines get that level. But IREN, from a fleet efficiency, is setting the standard.
Yeah, they certainly are. And a great update, which we covered this week. We also had Dan Roberts on. We did about 3 podcasts on IREN in the last week. So make sure you guys check those out. Now, Anthony, just a quick follow-up on Hive. So this is one we covered earlier in the week. There was a correction on their report. So we just wanted to highlight that for you guys and make sure we pointed out the correct number here.
Yeah, no. So their update came out yesterday, and I noticed there was, you know, something was possibly incorrect because I dropped a note to the company just to say that they'd announced they'd increased their HODL by 1%, but the numbers didn't reflect that. So because I didn't get a response back before we podcasted, we went out with their update as it was. But then subsequent to that podcast, Hive released a correction last night. So the only thing that's changed on here is the size of the HODL. So on their initial update, they had 2,533 in their HODL, which was the same amount as they had in July. But having said on the top of their update that they'd increased by 1%, that's now reflecting the correction. So the Bitcoin HODL sits at 2,567, which is great for retail investors to see. That's more Bitcoin, albeit you know, 34 Bitcoin, but it's welcome to the retail investors, and that increases their HODL now, which is now 151 million based on the price of August the 31st. So that was the only thing that was affected. Everything else, in terms of mine, in terms of hash rate, in terms of efficiency, all was accurate. It was just one number. And so maybe the you know, person putting the update together on behalf of the company just use the July number instead of inserting the August number. But that's been corrected very quickly, and we're happy to show the correction on the podcast here so everyone can see.
See, that wouldn't happen if it was on the Bitcoin ledger, Anthony. All these would be tracked and recorded, authorized transactions. You guys, we wanted to make sure we corrected that one. A ton of data coming out this week. The first week of the month is usually my favorite as we get so much insight into these miners. And again, kudos to Sam Tabar and really many of these CEOs for overly transparent updates. The amount of access and information we have in this industry is not normal, you guys. Anthony, you've talked about this a lot. We are so spoiled as a retail community to have the access, the insight, the conversations with these leaders, obviously extremely busy CEOs. So we appreciate all of that. You guys, if you're still watching the video at this point, hit the like button. It's free to subscribe. It's free to like. It helps us out in a big way, getting this content to other people who may find value. If you've got questions about any of these miners, leave them in the comment section below and let us know what you thought about August numbers. That's all for today. We'll see you next week.